Hey, how's it going, everybody? Welcome back to the channel. So today I'm going to be dropping a gem. I'm going to be dropping one of the best videos I've ever made on YouTube, and I've been on YouTube for 2, 3 years now. And I've been investing in the stock market for quite a while. I've been invested since I believe late 2016, and I've been interested in the stock market since about 2015. But I turned 18 in 2016, so I've been invested ever since I was turned 18 years old. And I've learned quite a bit from the market for the past few years. It's been about almost 5 years. About to be 5 years this year once it hits August or September, when I've been in the market for quite a bit. So I'm gonna be showing you guys and telling you guys how I personally believe is the fastest way to grow your Robinhood portfolio or your stock portfolio, whatever a brokerage you're using. What's the fastest way, in my opinion? What I've learned over the years, what have I experienced, and what I've learned from all my mistakes that I've made. So, when is the best time to get started in the stock market? What time should you get started? Should you start investing now? Should you start waiting till there's a correction? Should you start waiting until the markets drop down a little bit more? When should you start investing? The time to invest is right now. If you are interested in the stock market, or if you already are in the stock market and you have a little bit of money and you're not sure if you want to put more money in, I believe that you should just go all into the stock market, but only put what you're willing to lose. All right. So what I did in the beginning of my years when I started is I started working, and from all my paychecks, say I was getting paid like $400 a week or $500 a week or whatever, 1,000. I would put in $100 per week in the beginning. And once I started learning more, I put $200, $300 per week into the my portfolios, right? And that's how you get your portfolio to grow fast. If you think that you're gonna grow your portfolio from $100 to $10,000 fast, it's not gonna happen like that. Okay. The best way, if you want to make a lot of money from the stock market, is to put a lot of money in. So whatever it takes to increase the amount of money that you want to put into your portfolio, make it happen. If you need to work 1 hour overtime every day and you're getting paid $15, $20, you can put in another $50 to extra $100 per week into your portfolio. Anything that will help your portfolio grow, to put in, like any money that you can put in, just put it into the stock market, okay? Because it is the best time to invest is now. Don't wait. The more you wait, the more time you're taking off from the compounding effect. Even if the market goes down and you put money in, you're learning and it's experience, all right? So the best time to invest is now. Remember, they're printing out so much money that the dollar is losing value over time. That's another thing. You need to put money in to the stock market right now or invest it. I don't care if you're investing in real estate, the stock market, or crypto. Invest in whatever you believe will help your money increase over time, okay? That's what I believe in. Also, how much money should you put in, right? If you really, really want to get into the stock market, I'd say, and remember, I'm no financial advisor or anything, but if you really want to make a lot of money from the stock market, I'd say put in as much as you can. Have your little emergency fund. Remember, always have an emergency fund. I say 2 to 3 months of extra expenses that you would need per month. Let's say you need about $3,000 to live per month. Say I would keep around anywhere from $6,000 to $9,000 in a savings account, but that's it. And after that, I would invest every single dollar that I could into the stock market. Okay, weekly deposits. All right. I don't care if you need to do a side hustles to make extra money to put in the stock market. Just do it. All right. That's how you get your portfolio to grow. If you had a portfolio that's $10,000, that's way better than just having $500 or $1,000. When you have $10,000, remember, we're doing percentages. All right. 1% of 10,000. What is that? $100. You're making $100 every time your stock portfolio goes up 1%. Instead of, when you only have $100, you're only making $1. Like, that's not worthwhile, right? The more money you put in, the more money you get out of it. Right. Also, what are your goals when you're getting into the stock market? Are your goals is to make income, to get dividends, to do like sell calls or sell puts to make that weekly income come in, or is it growth? If you really want to grow your portfolio, in my honest opinion, the best way to grow it consistently over time is to invest in growth stocks. Okay, invest in growth stocks is the best way, and that's what I'm doing. You see, all the stocks that I have here are growth beasts, right? Growth beast. So once you already know you have your money in, you put in your $1,000. Where should you put your money in? All right, where should you put your money in? The first thing you want to look into is the type of industries, right? You want to look into growing industries, right? Do you want to put your money into electric vehicles, right? Or electric vehicles is a growing industry, growing very fast, fast growing. Cannabis is growing very fast, very, very fast. You want to put your money into e-commerce. E-commerce is growing very fast. With the pandemic hitting, everyone's buying online. No one's going out as much. It's the best way. Would you rather put your money into Amazon, right? That's growing fast, or would you put your money into like a retail store, right? What would you do? Which one's gonna grow faster? Obviously, Amazon's gonna grow faster, or eBay, right? Whatever is growing faster, that's the best money to put your money to put in is into those growth beasts, because that's when you know that they're gonna grow over time, and then the value of the stock is going to increase, right? And they're going to increase their revenues. They're going to slowly over time. They're going to get profits, increase their profits, and they're going to be monsters, right? Look at Amazon. Amazon's one of the biggest companies in the world. Tesla, in just 1 year, it's becoming one of the biggest companies in the world. EV, electric vehicles, e-commerce. Cannabis is growing very fast. Just the other day, Africa went up like 30-40% just this week. Just this week, it's growing this fast. Look at that. That's crazy. I'm invested into this. I believe it's going to grow even more. All right. And then this is an important one right here. What is diversification, right? Should you diversify? Should you put your money into one stock, all into one stock, or should you put your money into all like 5 or 10 stocks or 100 stocks? What should you do? If you are wanting to grow your portfolio as fast as you can, in my personal opinion, if you look at the richest people in the world, Elon Musk, Jeff Bezos, Elon Musk has almost all his wealth in just 2 or 3 companies. Just 2 or 3. Jeff Bezos, Amazon, that's all. They are the richest people in the world because they put all their money, they bet on themselves, on the company, on their company, and now they're the richest in the world. They didn't diversify into 100 different things. They just stick to 1 or 2 things or 3 things, and look at them now, richest in the world. In my opinion, I believe you should invest, or what I would do is invest in one stock, a lot of money, or 2 stocks that you have strong conviction. You believe that this stock is so undervalued and it's going to grow so fast, so much that your portfolio will just explode. And that's my bet. And for my example is Neo. I put almost 50% of my uh, around almost close to 50% of my portfolio into Neo. I have about 11,000, $12,000 into it. It's almost 50% of my portfolio because I believe Neo will grow so much in the next few years that it will grow my portfolio to an insane amount. Okay. That is what I believe in. It also depends on your risk tolerances, right? If you have a high risk tolerance, then go all in one stock, right? As long as you can take the hit if it goes down. Okay. But if you believe if you do your research, you've been researching this one company, you're an expert at this one company, you know exactly what's going on in the company, and you know for a fact that this company is going to grow tremendously into the future, why not? Why not put your money all into this one stock? You research it so much, you put hours every single day researching this one company, and you know that they're growing so fast, they're doing double digit growth, triple digit growth year over year, quarter over quarter, and you know they're going to keep doing this for many, many years into the future. Why not put your money into this one stock that you believe in, or these 2 or these 3 stocks that you believe in? And then the next thing you know, your bet pays off. Your money triples 4 times, 5 times in a couple of years. Having your money 4 or 5 times, 10 times, if you start putting money every week, you put your 100, you put your 200, you put your $300 every week. You find out ways to make more money, and you put money into the stock that you believe in, that you research every single day, hours every single day. And the more you research it, the more you like it. And then months pass by, stock dips a little bit. Nothing wrong with the company, right? Just the market goes down. You put more money into it, and it starts going up in the next couple of years. That's what happens, guys. And these are so many. I'm telling you guys from experience. I made so many mistakes. I bought Shopify at $80, and I sold it. I bought Tesla at under $100 or around less than $200. I sold it. I bought Amazon at $700, $600, $900. Sold it. Just buy it and hold it. Buy and hold. Best way. The best way to make your money, in my opinion. I am no trader. Remember, I'm an investor. I'm a long-term investor, and I believe that's the best way to make money, consistently make money years upon years. Trading, not my expertise. Okay, not my expertise. All right. Also, my next point: how much money should you have on the sideline? All right. Say you bought a stock. Say you bought a stock, whatever. A stock is called a ticker symbol ABC, right? It's at $10. You put $1,000 into it. All right, and it goes down. And say you just put all your money into it. What if it keeps going down? And nothing's wrong with the company. Like I said, nothing's wrong with the company. It keeps going down. It goes down to it's 1,000. It goes down to $700. And if you didn't have any money on the side, you just miss out on a big opportunity to buy. I believe, in my honest opinion, that you should at least have 5 to 10% cash on the side always in the portfolio, and buy on dips. All right, because the best, I'm gonna show you an example right here. You know what happened in the stock market crash? Let me see if I have let me look up this ticker real quick. QQQ. I'm gonna show you an example, right? And this is what happened to me. All right, this is exactly what happened to me. If you look in the past 5 years, this happened right here. At the end of February, my portfolio was at all-time highs. All-time highs. I invested every single dollar that I had. Every single dollar. Had no cash on the side. Then the stock market completely got destroyed. And I couldn't buy any stocks. I had to sell out of stocks. And it got destroyed. And imagine if I had money on the side. If you have money on the side, you can buy these stocks at 10, 20, 30, 40, 50% discounts. If you buy a stock at a 50% discount and it comes back up to where it was, you double your money from the bottom. You double your money from the bottom. That's amazing. That's amazing growth right there. Amazing growth. So if you would have just have money on the side, always have money on the side. Always have money on the side and buy on dips. I believe if you believe your stock's going up way too much, maybe you shouldn't buy it. Maybe you should just save up and wait for another red day in your stock that you believe in so much, so you can buy it on a little bit of a discount. So what I believe, and remember, I'm no financial advisor, is when you have a stock and you put money into it, it goes down, you put more money into it, and it starts going up more and more and more and more, you save your cash and wait for red days, and then you buy on red days. It goes down, you get a discount, and it comes back up, wait, ride it out. And just keep buying to that one or two or three stocks that you believe in, that in your mind, that the revenues will 5-10x in a few years, or 5-10 years, that your money will be worth a lot more in the long run. Always have money to buy when the stock goes down, when there's a discount. So always have money on the side. Always, always, always. Doesn't matter what. Always have money on the side. Next point, and this is probably one of the most important ones. If you're new into this, there's this thing called margin. Basically, your broker lets you borrow money for a percentage for per year, right? Say Robinhood lets you borrow money for 2.5% per year. So you have $10,000. They allow you to borrow $10,000 for 2.5% per year. Should you use margin, right? And this could be controversial, but I believe that you should use the margin, especially right now since it's a 2.5% discount. They're basically giving you money, for you to invest. But be very careful with margin. I believe you should never use 100% of the margin, because just one day you get into a margin call and you have to sell all your stocks at maybe at a loss. Maybe you don't want to do that. The only reason I would use margin is if there's a big red day, huge red day. I'm talking about like a correction, 5-10% of the market goes down, and then you have margin, and then you buy at the bottom point. Maybe you buy 10% margin. I believe that you should never go more than 50% margin. Once your portfolio dips 50%, that's when they start giving you a margin call and they forcefully sell your stocks for you. And then that's the worst thing that could happen. This happened to me. Same thing. I had Tesla. I'll show you an example. I'll show you. This is why my portfolio is really messed up. Right here, I had Tesla. I had $20,000, I believe, worth of Tesla, or more, or 30 or 40,000, I believe. And I had lots of money on margin on Tesla. I believe Tesla was going to do good. Then the crash, the pandemic, boom, murdered my account. I got margin called because I was so much in the margin. This is one of the biggest mistakes I've ever made. Then boom, my portfolio went from 40,000 or a little more than 40,000 all the way down to below 10,000, I think, at one point. One day I was all the way down to 8,000, I believe. Because of that, my portfolio got destroyed. I'm still doing okay right now. Could be doing way better. I could be into the $100,000-$200,000 right now if this didn't happen. But I'm telling you guys from experience what I've learned, to never put too much money in margin, never use too much of your margin. 10 to 20% okay. Um, um, but it's better not to use it. But once that huge crash happens and you start seeing the bottom or slowly recovering, and then you buy on margin, that's probably the best time to use your margin, I believe. It's when there's a huge crash, the whole market starts crashing 20, 30, 40%, and then you put margin in there, you put like 20%, 30% margin, and the market doesn't go down that much anymore, and then it slowly starts recovering, your margin, you're gonna make so much money off of that. But never go too deep into margin. Never go 40. I see the max 30%. And this is just for me. It's up to you guys, remember. I cannot tell you what to do, but this is what I would do if I was to start over. This is the best way I would grow my portfolio. It's just to remember, start investing today, put in as much money as you can weekly, and I would pick growing industries, e-commerce, EV, cannabis. Diversification depends on your risk tolerance. Should you put into one stock, two or three stocks? Up to you. How much if you believe in this one company a lot, if you have high conviction stocks that you believe in, why not put most of your money into it if you believe in it that much? And how much money should you have on the side? Anywhere from 10 to 30%, I believe. Anything more than that, then you're kind of killing it. You should be using your money into invest. I think 10 to 20% is good enough. If there's a crash that happens, you put all that money in, and then you want to use margin, that's up to you. I believe margin is a tool that can help you grow your portfolio even more if you use it wisely. Do not. I would never put 100%. I would never put 60 to 70%, honestly. And always have money on the side. That's the best way to grow your portfolio. Oh, and I forgot one more thing. Option trading. Option trading, same thing. This is a risk tolerance thing. If you have a high risk, then maybe you would go 20 to 30% in um, option trading. And the best way to do options, the most profitable way to do options is by selling calls and puts. But that's just to get some income. But if you want to make a lot of money, it's going to be a little bit more riskier. But is long-term call options, in my opinion. Remember, I'm no financial advisor, but long-term call options, I believe, are the best way to make good money um, off of the money that you have. Long-term call options, in the long run, you can double, triple, 4x, depending on how high your stock goes up. You can even 10 times your money. I've seen many people buy call options on Tesla stock in the past year. They 1,000, 10,000, 100%. 100,000% gain. That's an insane amounts. But you have to, like I said, in my opinion, this is all up to you. Risk tolerance. Don't I would never put 100% of my portfolio into option trading because it's just too risky. One bad trade and you lose all your money or 50% of your money depending on how fast you are on executing your trades. But for me, my risk tolerance, I would put about maybe 10 to 15% on option trading because if you lose all your money on the options, your portfolio would only go down 10 to 15%, which is all right, for me at least. So it's all up to you. If you want to go more into that, then it's up to you. But just be careful. One of the option trades are one of the ways that you could lose all your money fast. Like 1 to 2 days, you could lose your money very fast, or you can make lots of money very fast. So option trading, what I do is 10 to 15% of my portfolio would be in options, long-term options. So it's less riskier than just the weeklies or the monthly options. And long-term, you're as long as your stock keeps going up, the value is going to keep going up. So, all right, that's it for today. That's what I have for you. This is the video that I wanted to put out, and on my opinion, on how to grow your portfolio as fast as you can. And remember, I am no day trader. I'm not a trader. I'm a long-term investor. So I'm looking for long-term gain, consistency, which I believe is the best way. If you can find another way doing it and that works for you, you do it. Whatever works for you. Okay. And that's it for today. Thanks for watching.